The world's factories started 2014 on a firm footing. Markit today published its global manufacturing PMI data. So this is covering every major developed and emerging market in the world. The index, a weighted index of everyone's manufacturing output, showed a very slight easing in the rate of growth, but we've come down only very slightly from a 2.5-year high in December. The actual index fell from 53.0 to 52.9. But we saw a slowdown in the US that was weather related. If we took that into consideration, then the overall rate of growth would have accelerated. So what does this mean? We've got a chart here which compares our PMI, which is the red line, against the annual rate of growth of manufacturing production from official sources. The PMI is available in advance. We're tracking annual growth of around 5% still, despite that slight easing that we saw in January. So this is the best growth phase that we've seen in manufacturing since early 2011. However, there are big divergences around the world in terms of growth rates. What we can do here is we can rank all the countries that we cover by their PMI. So any reading above 50 is growth compared to the previous month, and readings below 50 is a contraction. What we can see from this ranking is that the top half of that league table is dominated by developed countries and in particular neighbours from Germany. The lower half is littered with emerging market countries. Starting at the top, we can see that rankings are led by the UK, which is seeing near record growth of output and new orders. We've been conducting that survey around 20 years, so a very strong pace of expansion signalled there. Second is Japan. Japan's PMI is at the highest we've seen for nearly 8 years. It's also seeing near record output growth. Third place, Germany. Germany is seeing a significant upturn, which is leading the Eurozone out of its downturn. Now, we're also seeing neighbouring countries from Germany benefiting from that as supply chains are starting to ramp up delivering goods to German factories. If we turn to the lower half of the table, we can see it's full of emerging market countries. Right down at the bottom, we've got Russia, where the PMI is signalling the steepest downturn since 2009. China's also down there, seeing the steepest contraction for 6 months. Also Brazil is in there. The other significant countries down in that lower half of the rankings are France and Greece, but their rate of declines are easing. Now, if we turn to a similar ranking for export orders, we can begin to see what's going on here. We can see once again that in terms of export orders growth, the market is being led by the developed world. Emerging markets are struggling. And one thing that we're seeing here is that Eurozone countries, previously struggling Eurozone countries, are now seeing their export growth pick up. Countries like Spain have made good progress in being more competitive. They're lowering their unit labour costs and winning more export business. This is not the case for many emerging market exporters. This is a key factor behind the turnaround that we're seeing in this upturn, where the developed world is leading growth and the emerging markets are struggling.